All right, welcome back to the Disturbing Illusion channel. I really appreciate you being here. Looks like the stock market, the Dow at least, is up 600 points in aftermarket trading after losing about 1% today, about 350 bucks. And people are saying that we are entering into bear market or recession territory. And I just want to remind you, first of all, let's watch this little clip from CNN right here saying that we're in white knuckle territory, and it's been another white knuckle day with regard to the stock market. Let's take a look at this.
Hour with breaking news. Another white knuckle day is already unfolding up on Wall Street. Right now, the Dow is down about 900 points, a little bit more than 900 points. Fear of a global recession. Those fears are alarming investors here in the United States and indeed around the world, even as President Trump's advisors try to downplay the growing concerns.
There's no escaping the fact that business leaders are really losing confidence, given the fact that there doesn't appear to be any reversal happening here on negotiations. President Trump telling American businesses instead to hang tough. How can businesses plan when they don't really know where all of this is going to land?
Now that's part of what's going on here, because as you'll note, whether you're Keynesian on the economic scale or Austrian economics, which is the free market economics, when you create uncertainty in the market, no matter what your structure is, psychologically speaking, this can cause major fear and panic in the market and cause people to do things that they otherwise wouldn't have done. And tariffs are a big part of that. Like back in the 1930s, I think it was June 17th, 1930, the Smoot-Hawley Tariff Act was passed. But 8 months prior to that, when it was moving through Congress, it created this massive amount of uncertainty, and investors feared that these higher tariffs would disrupt international trade, reduce corporate profits, and invite retaliation from other countries. And that's kind of what we're seeing right here. This is almost like a replay. It's like, if you haven't learned from history, then guess you're doomed to repeat it. And here we go again. So, and I'm going to get into some of the strategy, whatever you think about Donald Trump, whatever you think about this not even being a free market, because it's not, because we have the Zio International Banking Cartel, distributing and putting a monetary value on the issuance and value of your time and laboring energies, of the product of your time and laboring energies, which is still the world reserve currency, although that's slipping away with the BRICS nation and this Enbridge program that China's trying to get involved in, which also Saudi Arabia is on board with. But before we get back to the tariffs, let's watch another clip right here. Let's watch a little bit more of this CNN thing, because there's some truth to what they're saying, and they also want to foment and create fear, because we do live in this illusory world. But at the same time, people's 401ks are slipping. It went from a high of 45,000 on the Dow to today it was a low of 36.7. Now it's bounced back up in aftermarket trading to 38.7. So we're about 7,000 or 6,500 off of highs, which is about 7 or 8%. Check this out.
Yeah, Christina, that is the big problem. They don't know what the cost of their goods is going to be, and so they don't know right now, should they be hiring workers or should they be firing them? Should they be retreating or should they be expanding? I mean, it just creates mass confusion. Now you look at the...
And anxiety contributes to market volatility, but day traders and swing traders, they love that volatility because they can short and make money on the way down, or they can go long and make money on the way up. So intraday traders are loving this because they love volatility.
Markets right here, the Dow is up by almost 1,000 points, 2.5%. The S&P 500 down by 2%. Earlier, the S&P did enter bear market territory, which signals a 20% decline from a previous high. Now, the S&P is trading just above that. The key number...
A correction is basically from 10 to 20%. Bear market territory is 20 to 40%. And devastation is above 40% from what I understand. But check me on that.
To watch is 49.15. If the S&P closes below 49.15, then this would be the second fastest bear market in history, second only to COVID in 2020. Of course, then it was a deadly virus. Now it's a self-inflicted trade war. And the big fear is that, this is going to cause prices to go up, it's going to cause global trade to grind to a halt, and potentially even an economic downturn. We are hearing from more business leaders, some of whom have been quiet about tariffs recently. Some of them are speaking out. JP Morgan CEO Jamie Dimon, he said in his annual shareholder letter that, tariffs, they could increase inflation. He said whether or not the menu of tariffs causes a recession remains in question, but it will slow down growth.
I heard somebody refer to Jamie Dimon today as Jamie Demon. He's one of the movers and the shakers. And as far as people who we know their names, the powers that should not be, this is one of the biggest power brokers that we know.
As long as it doesn't end up being America alone. Some are even invoking Smoot-Hawley, the 1930 law passed by the U.S. Congress that sent tariffs skyrocketing and made the Great Depression even worse than it had to be. Take a listen to former St. Louis Fed President Jim Bullard on CNBC this morning.
This has dramatically raised the risk of a Smoot-Hawley type outcome. So Smoot-Hawley was 1930. Other countries retaliated, global trade collapsed, and the great...
Do you guys remember James Bullard from the St. Louis Federal Reserve? He's the guy that said that they planned the orchestrated, planned shutdown of the U.S. economy prior to or while COVID 1984 by George Orwell was going on. So this guy is one of the movers and shakers too. He's one of the planners that initiated the collapse, that flash collapse during the COVID-19 thing.
Depression was on. So I think that's really what has people worried about this. It doesn't have to work out that way.
Here, let's look at a real quick chart here. Somebody put this up, says April 2000's .com crash was a 5.8% crash. 9/11 was almost a 5% crash. October 2008 was 9%. And August 2011, the U.S. credit downgrade was 6.7%. And then COVID 1984 by George Orwell was 12%. And as of April 3rd, and this is before what happened, from then to the 7th, which is today, it's been about 9 or 10%. It has since bounced up, including with the intraday trading that we got going here, or the aftermarket trading. Now we're up to, let me go ahead and refresh the screen. Now it's up to, we're up 1.72%. I don't know if you can see this right here, but it's up 1.5% right here on the Dow futures to 38,815, when previously it had closed at 37,965. So back to this counterfeit news network thing.
Some very strong words there from a former Federal Reserve official. There's others that are speaking out too. Bill Ackman, the billionaire hedge fund CEO who endorsed Trump for this election, he's basically pleading with the president to hit the pause button on this trade war. And he said, if not, we're heading for a self-induced economic nuclear winter, and we should start hunkering down. Also, just want to look.
Now, I told you that I was going to tell you what people are saying that Trump is doing as far as a monetary strategy, as he knows. And I don't know how you couldn't know. If you're one of the Trump economic advisors, I don't know how you couldn't know that instituting these retaliatory tariffs were going to cause major market uncertainty, which would cause the market to go down, which is typically historically what happens. I don't know how they wouldn't know that. But people are saying that this is part of Trump's overall strategy to force the Federal Reserve to lower interest rates, which would put Donald Trump in the position and the Trump administration in the position of paying off the national debt with less interest. That's kind of interesting. Not sure that that's exactly what's going on, but some people are surmising that that's what is going on.
At things historically to just sort of show you how bad the market has been lately. So the S&P 500 entering today, this does not even count today's losses. Entering today, the S&P 500 is off to its worst start to any presidential term in modern history since the S&P launched in the 1950s. It's just staggering, and you can see how much lower the market is under Trump 2.0 than it was at this point under Trump 1.0. So we got to listen. We have to wait and see whether or not the president's going to heed these warnings.
That's interesting data. And before we go on with this, what do you think the outlook's going to be in the next 4 days? What do you think is going to happen by Friday? Do you think that we'll sink here to the 35.2 area? Do you think we'll go to this support band of 32.4? Do you think we'll drop to this right here at 28.5? It'll be pretty interesting. If we go back to 28.5, that's October 3rd, 2022. And if we get a precipitous drop like they did in the Convent 1984 by George Orwell thing, you got to admit, though, that we're due for a correction, a major correction, because from 2008 until today, and here's the 2000, I think it only goes back, this chart right here only goes back to, okay, we got 2008 on the chart. The lows over there, it hit 6,742. We are up in the 40,000 range. So it'd be interesting if we got a major correction that surpassed 28.5. Be really, really interesting. I haven't drawn any lines on this. I've seen people drawing lines, but it's pretty interesting that we got kind of a line going right here. And I'm not sure where the 200-day moving average is, but it'll be interesting to see what happens play out in the next couple of days.
From CEOs and investors and economists, he's clearly shown that he's more willing to stomach economic and financial pain than he was during his first term. Still, though, these losses have got to get the attention of the White House, and we're just going to have to wait and see whether or not the president's willing to change course at all on tariffs.
By the way, with that Smoot-Hawley thing and talking about economist Milton Friedman had argued that the Smoot-Hawley impact was more psychological than it was structural, and that what it really signaled was government mismanagement.
Let's bring in economics and public policy professor Justin Wolfer is right now. He's from the University of Michigan. He's joining us from Ann Arbor right now. Justin, what's the
I know one thing. Fake stream CIA infiltrated Operation Mockingbird, MK Ultra Media wants you to be fearful. One thing we know for certain is that whatever's happening in the stock market, whatever is happening with the global economy, whatever's happened with the monetary system, it's all planned by these Bilderberger people in the back room. It's planned months, years before it ever happens. They put these things on their schedules. They make sure that these things happen. And when you see wealth disappear from, say, like the stock market or your 401k, it's appearing somewhere else. Somebody else is benefiting from a fall in the stock market, just like people benefit from a rise in the stock market. There are two sides to every trade. There's the winner and there's the loser. If your 401k is losing, somebody else is winning. And if they get tipped off to policies that are going to happen before that dip happens, you can capitalize in the billions and the trillions of dollars. Make no mistake about it. Everything that you're seeing right now is planned to happen for a particular reason. And usually what happens is it's a transfer of wealth and it's a transfer of power. So what you and I can expect as the commoners is to have less money, or our dollars are devalued. The dollars that we do have will buy less. In this case, it'll buy more if you're going to go for the stock market. But what most people are buying is not stocks. They're not buying bonds. Most Americans are just wanting to buy food and housing and fuel. So it's going to affect everybody's bottom dollar because it's going to erode the value of the dollar. So what they're saying Trump is doing, some of these people speculate that what Trump is doing is putting the economy in a certain situation so he can get the Federal Reserve into a headlock and force them into fulfilling one of their dual mandates, was just to even out inflation and make sure everything is nice and stable, which means, hey, bad things are happening, make it cheaper to borrow money. So go ahead and bring the interest rates down. I don't know. What do you guys think? And where do you guys think, where do you anticipate that the stock market is going to be on Friday at the closing bell? My guess is that the stock market is going to get hung up at around 36,100. That's my guess. Leave your thoughts about this for the world and the global thought, please, in the comment section below. Again, I am not an economic advisor or an expert of any sort. I'm just kind of spitballing my way through this thing, trying to figure out what the heck is going on. I know there's one thing. They want power. They want control. They want wealth. And they ain't going to share it with the rest of us. You know why? Because it's a big club and you and I ain't in it. I'll see you in the next video.